Cool. All right, guys. So today we're going to be going over London session. I know there's like 5 people that trade London session, but you guys are getting left out. I'm here to save you. Don't worry. All right. So one thing about London session is a bit harder to trade because you have only one session to look back on. Okay. Now let's get some things out of the way because I don't have slides for like everything. So as we go, I'm going to be explaining. So here's one thing: when you're trading um, a reversal, like a London reversal day, for example, you absolutely need to have weekly logic supporting that, right? Um, because you don't have the information yet with just Asia session. And I would never. Another thing is like I'm gonna start just saying some just things, right? It's like Asia session. I'm never going to be trading away from Asia higher lows if I'm trading London. Okay, like I said, I'm never going to trade a reversal day if there's no weekly logic behind it, right? So either the previous day has to hit a key level to where I can anticipate a London low of the day, or that day in specific has to hit a higher time from key level because you can't anticipate a reversal without that. That's the only you need this like you need more confirmation and things backing you up because you have less to work with in London session. Okay, so ideally you want to be trading continuation though, like daily continuation, right? So what are some continuation signatures that we know of? It's consolidation and retracement. So we want to see this consolidation retracement via sessions. Okay, so Asia consolidation and Asia retracement. All right. So what this tells us is that there's no established high of day or low of day at this point. So what does that mean? That London can go and create that low of day and then trade to the unestablished high of the day. Okay, so a lot of times when you look back, this is for New York as well. If you have no established high of day and the daily is opening low into some key level um, to form a low of day, then that is very high probable to expand away from that level because there's nothing, there's no reversal on the opposing side of that, if that makes sense. So we'll go over some examples. But if the previous day it expands and then consolidates in Asia, or expands and retraces in Asia, then these are continuous signatures, so that's higher probable for London to expand. Okay, a absolute no-no for trading London is if Asia expands. Okay, so it has to do one of these two things. Okay, so now we're just setting profile signatures. It's a type of thing we need to require. So this is an example of what if Asia consolidates, then we want London to obviously create the low of day. So it's always going to sweep out London or Asia lows. Sorry. So this is an example of we can actually use Asia low of the day as a reversal point, right? So remember, if you look back on my April 5th stream, if you haven't seen it, we talk about key levels forming around the daily open. But also you can create key levels within the same day. So this is what that is. So you're creating a key level which is a London or Asia low of the day in the form of hourly or 4-hour swing points around the daily open. So if you manipulate this around the daily open, what does that form? A small daily wick. So it's more likely to expand, right? And the reason why we cannot trade a reversal day on London session is because London like reversals, they generally form expansion days, right? So if you have a large opposing run, then you can't get a New York continuation. You know what I'm saying? Because it has that large opposing run, right? So it's like if you get a large opposing run in Asia, then it's like that doesn't really support that profile, if that makes sense, right? So here's an example of Asia consolidation, London reversal off that consolidation. So just classic A and B, really. This example of the previous expanding, Asia retraces at the, if it hits a key level, whatever it is, it can be a fair value gap, doesn't matter, whatever key level. But the opposing side of this reversal that we see are unestablished high of the day. So it's like this is not going to be high of day. So this key level here that we're seeing, right, it's supported by multiple things. The daily is opening low first, right? There's no established high of the day. Okay, we're forming that small wick, and we're putting in some sort of reversal. So it's more high probable to go and target these unestablished high of the day, right? So it's very important that the daily candle is opening low, right? We're either consolidating or retracing, leaving unestablished high of the day, and then trading to some sort of relevant level whether that's the Asia lows at the relevant level or something that maybe formed the previous day, like a fair value gap or something. And we simply have some sort of reversal, whether you require whatever your requirement is, 15-minute CC, 30-minute CC, hourly CC, doesn't really matter. I don't require that. GXT, you guys already know, right? Which we'll go into some examples, but all this is, right? Expansion, retracement, expansion, right? Over here, it's some sort of expansion the previous day, consolidation, manipulation, distribution, right? This is what that would look like if you are trading a continuation, which is always ideal when trading a London day, right? For continuation, it's where it previously expands, right? After expansion, what kind of phase of price do we want to see if we want to continue another expansion day? It's consolidation or retracement. So one of these two things, right? Okay. How do we want a bullish day to form? We want to open low first, ideally, right? This is an example of the reversal point being formed in the same candle, not the previous day, Asia lows, right? This low is formed intraday, okay? So we use that as a reversal point because it's in the upper half of this previous candle's range, but in simpler terms, it's around the daily open to form that small wick, right? So we want price to reverse here, and then once we get our confirmation, etc., we can target this. So a lot of times, guys, like when you're trading London, I would really, really, ideally have the Asia session highs available when you trade this. So you guys see me all the time. Sometimes I'm taking these small pieces from the market where it's just an hourly model. So here is an hourly model. We talked about this in my April 5th stream. It's just the low of day created from some 4-hour or 1-hour reversal point, and then you're just targeting a 1-hour or 4-hour reversal point supported by the way the daily candle is forming. Okay, so this daily candle is opening low, right? Here is your reversal point. What is your target? It's these highs. I don't give a shit what happens after this, really. I can hold my runners to whatever the hell, but like this is what you need to be focused on. It's entering before we take out this high, and then after that we can do whatever. That's where a lot of people go wrong. They try to enter after the fact where we hit relevant levels and shit, and they get chopped up. It's like the most expansive move will be from here to here, right? Especially in London because you're entering below the daily open. You know, you're catching the low of day. So this is where you want to be involved before we even take out this high. Okay, just like over here, daily's opening low. You're entering within that daily candle's wick, right? I want to be involved before we take out the Asia highs, the current high of day, right? Ignore this. This is like a glitch. Now here is a reversal day. Now what do we need? A small wick. That's one thing. But ideally, this candle here on the daily time frame actually trades into something relevant, right? Or you have weekly range logic where Monday consolidates, Tuesday manipulation, right? The way this daily candle forms has to support a bullish day, right? So either it consolidates where there's no established high, or maybe open low first, right? Where like Asia is just a high of day, we manipulate, have an S&P, etc., and you can trade towards that and then beyond it, etc. So this is what it looks like via candle profiles on the 4-hour time frame. So you can view retracements and consolidation on the 4-hour time frame. So Asia is composed of 2 4-hour candles on the 4-hour time frame. Okay, so either maybe you have a inside bar where 1800 and the 2200 is just inside barring between 1800's candle, right? That is a consolidation signature. So if London manipulates that, has that small wick forming the low of day as well, then we can align our expansion candles in the opposing side to target Asia highs. And then whatever's beyond that, we can hold runners, obviously. Here's an example of 1800, 2200, the daily opening low first. So the open low is the retracement signature, leaving failure swings, right? And then you just reverse off of Asia lows. So you have to reverse off of 2200 lows at every single time, right? Now, if it's an inside bar like this, you would obviously reverse off 1800 low. So it's simply like you're going to be reversing off Asia session lows. You always want to be taking out Asia session lows. That's the rules I want you guys to stick to. Who cares about an Asia reversal? This is something that AM talks about, where he doesn't care about Asia reversals because there's not enough data to work with to anticipate that being the reversal point. Just stick to London reversal. Okay, it's a much more higher probability. Now, as you see here for my small wick as well, right? See how the daily candle is supporting this expansion? That's very important. So now, this is what it looked like for a expansion candle, continuation, IRL, ERL. So remember, we're going to be marking out EQ of the previous day's range. We could have we can refine that key level on the 4-hour or 1-hour time frame. This is something I talked about in potentially my April 5th stream, but I know I did it on my April 26th stream, right? So within this previous daily range, maybe you have a 4-hour fair value gap. The daily opens low into it first, leaving unestablished highs. So that is a retraces signature when you're leaving behind failure swings, right? So it's either Asia hits this level, right, and then we sweep Asia lows to reverse off of, or maybe these don't hit the key level. Then I want London to go and trade into that fair value gap. And as long as it has that small wick, that's our filter for price, right? If it doesn't have a small wick, then you have to wait for New York or the next 4-hour candle to trade it. Now here's an example of ERL IRL, right, where the previous day expands into something relevant, so we can already anticipate a reversal. That's the thing. On the daily chart, you have to be anticipating a reversal because, again, we don't have enough data to work with here. Again, I don't know why these wicks are black. They're supposed to be yellow, but whatever. Here's an example of we sweep out the previous day's low, for example. Maybe we consolidate. So expansion, consolidation, manipulation in London. Have a small wick. We can target this high or maybe this fair value gap, etc. Here's an example of order pairing ranges where maybe you have a swing low or consolidation prior to London. Ideally, you want to take out that range low, which is creating a relevant low, a protected low, right? So the same way we use relevant lows taught in AM's course, London, the manipulation can create that protected swing, right? When it manipulates those relevant lows. So that's an example of here, right? And that's really all I have here. Now let's get into some examples. So here's an example of the previous day expanding, right? So why can we even trade this day too, though? So this is another specific thing. Like, when can you actually anticipate an Asia or a London low of day? When can we actually do that? Now, we're not going to act on the Asia low of day, but we can anticipate it. It's when the previous day hits something late in the day or reverses late in the day, right? Where if it hits a key level on the higher time frame or puts in some sort of reversal late in the day, it doesn't have enough time to reverse in the same day. So this is when the next day will open up and continue that reversal. Does that make sense? So let me just pull up a quick example of that because it happens quite a bit. I could just refer to this, like, I trade indices obviously a lot, so I just remember some examples of this. Here's one of them, guys. So if you look here, let's look at this relevant low. And again, this is the only reason we can anticipate a potential Asia or London low of the day the next day. It's because of weekly range logic. It's because the previous day actually did something. It traded into a relevant low. Look at the space between these lows and these fair swings at these lows, right? Look at the way the weekly candle is forming. Just like the daily candle, if it opens low first into a relevant level, what is at the opposing side of this manipulation? It's an unestablished high. Like the open low of a candle, when it trades into a relevant level, if it doesn't trade into anything or just immediately opens low, look at, do you really think this is going to be a high of the week? 1800 on Sunday? No, it's not, right? So that becomes a target for this next day. And also when we think about bullish candles, what do? They open low first, right? So what you're going to see is a lot of people will be thinking this is not reversal because we didn't, have a candle 2, but that's absolutely irrelevant. I'm telling you, that's absolutely irrelevant. Because why? Because of what time do we trade into this low? 1300. Bro, it doesn't have enough time to go and create a candle 2. So you don't have to wait for a candle 2. What you need to have is a reversal signature. That's the most important part. And obviously candle 2 is a part of reversal signature, but this can't form it. It literally can't because of when we actually trade into this low. What we do have is an hourly CST. So what can we expect the next day? Because we do trade into this low, right? We haven't yet really expanded away. So when will it expand? The next day, early on in the day, right? And this is when we can anticipate an Asia or a London low of the day. So if this is going to be, the reversal point right here, right? Well, what needs to hold if the previous day's low is not going to get swept? Is this fair value gap or this CST, right? So as you see, price trades into it. Now, if this is going to be the low of the day, which is 1800, what needs to hold this fair value gap? Right, so this is when you can just take your invalidation points. This I already went over this in my stream on April 26th. I'll show you one more example. I just can remember this. Here's an example. You have a two-stage SMT here. One crack right here. And you get a strength switch. Boom. When does this get created? Asia. Okay, so I can actually trade away from this because Asia created it. And actually the previous day it hit the reversal point, but it didn't actually reverse or anything. This is when Asia reverses, right? But I wouldn't be trading necessarily London. It's very specific, like you technically could because of this, right? But you need this extra confirmation. I hope that makes sense, right? Because here is your London, right? Candle 2 right here. But this is when I trade New York. Like this is still important to know because some people will not, when they're New York traders, they're going to be like, I don't feel comfortable trading away from this high in Asia, but actually you can, you know. And this is what I traded right here. You have a CPI manipulation right here and the 930 distribution. Right? So some of the things we talk about all the time about drivers. But anyways, I'll show you one more example. Here's a good example. So the previous day, what did we do? We traded into a low on the daily chart and created an SMT. See how there's no candle 2? It doesn't matter, right? Because if I go to the hourly chart, when did we actually create this? Very late in the day, 1300, right? So what can we expect, you know, if we haven't actually expanded yet away from this? Asia and London to actually start that expansion, right? Because all it is manipulation, and then it should expand away, right? But if it's happening late in the day, it can't expand away, so the next day will expand away. Does that make sense? You can even see it right here. You have this fair value gap, for example, right? When do we hit this fair value gap? Oh, never mind. It's not a good example. But Asia is the high of day here because we haven't yet really expanded away from it, if that makes sense, right? And that's where Asia high is day. Now, I took this trade right here on RTY. I took a loss this day, though. I took a loss and then a win. I took a loss on YM. I don't know how I remember that. And I took this win right here. But anyways, I digress. So that's one thing where we can anticipate, you know, when and where to, you know, actually form an Asia low of day, etc. So that's what I was hinting over here, right? If you have an SMT, etc., then what should it do? It should expand away. And this is where you see, I think you have an SMT here, even intraday. Yeah. You have an SMT here, right here, right? So that's London manipulation. But let's go over this day because clearly we start to expand away from this this manipulation down here. What can we target? These highs, which is the current high of the week. So what is this weekly candle doing? Opening low first. We have some sort of manipulation down here. So we can target the current high of week, right? So if you look here, we expand the previous day. What kind of phase of price do we get? Let's go back over here. We get consolidation. So how do you want to leave a consolidation? Ideally, you manipulate. And if you really want a high probable sequence, you wait for an SMT to create the low of day. So if I go to over here, we have that. What about over here? We don't take it out on DXY. So there's your SMT, right? And there's even some form of strength switching here, but we won't go too deep into that. But does that make sense, everyone? How it's just a expansion with the previous day created. So what we do overnight, we consolidate, which is that continuation signature. This is another form of seek and destroy, guys, or another form of consolidation is actually seek and destroy. We take at the high, we take at the low. That's a continuation signature generally. So that's what we see here. But let's get into the next example. And obviously, let's go to the 4-hour candle here. Obviously, you have that reversal candle. In Forex, it's 1 a.m. So you see that small wick, which allows you to trade this. Now it's just GxT, right? The low of that 4-hour candle is created from 2 a.m. And then you can trade whatever you want, right? Blah, 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 whatever. That's not the important part here. But now let's go into the next day. So this is something I traded. I traded this day, but not in London session. Let's get a little dive into how you can even anticipate this. So if you look here, there's actually an SMT here. So what was the trigger for this higher time frame retracement into this gap? It's a 2-stage SMT. Whoops, what the hell? What just happened? I think I just clicked the wrong thing, guys. Whoops. Oh my gosh. Is it over here? Yeah, sorry. Okay. So if you check here, here's your first crack. Here's your second. So I shorted this day, that's why. This is why I shorted this day here. Now, what do we see the next day though? Because the next day is always really important. Because if this is going to be true reversal, then what do you want this next day to do? We want all the assets to expand lower, but what do we see? Is that, remember, this asset was strongest because it's sweeping this high, right? And the trigger for all higher time frame retracements and reversals is some sort of strength switch. It gets pretty deep, but almost every single one has this type of thing. So that's what we see here. It gives us insight what we're going to do here. So if you check, this is clearly the stronger asset because we swept the higher time frame here, right? And what are we doing the next day? Is this asset is actually sweeping. We're actually creating a lower low here. The low of day is 2 a.m. We're over here creating a higher high. You see that? So that's a form of strength switching. Why is it switching strengths? So this asset can actually catch up, right? It can play catch up. So that's just some information there, but how does a daily candle form? It's opening low. It's kind of already in a key level, like a 4-hour fair value gap, right? Like this is where we ideally want to see some form of reversal anyways. So this candle here is what's important. It's really like this, because this candle here, this 4 o'clock candle, is actually what creates the SMT. Right? You see that 4 o'clock candle here is actually what creating this divergence. So that's the candle that we pay attention to, right? In this case, because before that, we wouldn't be trading away from this London low of the day. We'd be waiting for what? A sweep always, because we're not going to be trading away from London lows ever, right? So here is what we're waiting for. And now we're just the fractal model, right? So where's the opening price of that new 5 o'clock candle? It's right here. It opens low, takes out this little short-term low, has a CSD, boom. Right, we can look at the wick size of the 4-hour candle. Does it support expansion? Yes. Right, small wick here. Here's that SMT. So you can trade it, back to the previous day's high or this fair value gap, etc. It doesn't really matter. The fact that it opened low first is important. Look at the high of the day at this point when we created that SMT. It's just 1800. It's just a relevant high, right? So ideally you get involved right here, right, to go and target that high of day, etc. So that's an example there. This is something I traded, but in New York to get to this high. But we're not going over there right now. Now let's go over this day. This is something I took this week. This is weekly range logic. So it's when, remember, if you're going to trade a reversal day, because this is a reversal day, right, as you see, what do we need to have? We need to have a small wick, and we need to either have the previous day hit a key level, where we're sweeping out the previous day's low to reversal from, or this current day needs to hit some sort of key level. So in this case, the key level is the previous day's low. This is weekly range logic, because what do we have over here? It's a bunch of stacked highs. So whenever you want to trade into a drawn liquidity, you want to be trading away from what? Ideally a protected swing to get towards that drawn liquidity. So in this example, the weekly candle just opens up between this range and kind of gaps up, kind of trades higher. And then we just have that seek and destroy profile, especially on, I'll show you on silver, you can really see it. See that seek and destroy profile? So I know some people are trying to long this SMT. First off, there's no two-stage, but remember, if you want to trade an expansion day, how does the candle need to form? It needs to open low first. But what do we see this candle do? Opens high, opens low, opens high, opens low. That's not going to support any sort of reversal. So it's important to know that. So this is just obviously an Asia consolidation, right? So what's the ideal thing to do when leaving consolidation is manipulate, right? So as you see, Asia trades into this low, but it doesn't reverse, right? If it reversed, then what would we see? Is this swing point would have to expand away, but what does it do? It starts that expansion, but it just retraces into this range here, and then I don't want to see this in expansion. I don't want to see this deep retracements, right? So this is viewed as consolidation. Right, see this consolidation? So then we manipulate the range low because this asset takes out that range low. Okay, and then we get this CSD. So if you guys wanted to, if you guys are like expansion model traders, you have to require, you can't require like 5-minute CSDs, 3-minute CSDs. You need to be requiring like 15-minute, 30-minute CSDs ideally. That's kind of what I did here, but it's not. It's kind of like the expansion model, I guess, because it's a relevant swing in the market for sure. That's just kind of how I trade as well. I kind of still use that kind of stuff, but this the reason why I'm trading this as well is because of the 4-hour candle. It supports it. The daily candle supports it. It opening low first, right? Then the low of the day is created from a relevant swing in SMT. And yeah, if I were you guys, I would always require SMT, especially for London traders, because you're literally trading the low of the day. So if you have a SMT there, obviously that would support your reversal profile, right? Because I'm telling you, every reversal there is some sort of SMT. So that's all I have here. Monday consolidation, Tuesday manipulation. What allows it to expand is the way the daily candle forms, right? Not only a small wick, but also the way it forms, how it opens low first. That's very important, guys. Like extremely important. So now let's get into another trade. Okay, so this is that one example I showed you guys where we have an SMT printed the previous week. So if I show you here, let me just make sure I'm good here. I think we're good here. Here's the weekly open, right? It's right here. I'm trading on Monday here. So you can trade Mondays. I really think that's I don't agree with them not trading Mondays. It's just a specific protocol. If you have some sort of reversal already put in and there's still a draw on liquidity, Monday can still expand. Because as you see, Thursday we manipulate, Friday starts the expansion, right? And then Monday can continue to this high, right? Okay, so what are you going to do? You're going to look for key levels within the upper half of this candle's range because we're trading continuation. So some form of this, right? Where we want to see this, but we're really just doing this pretty much. Some form of this, right? We're marking out EQ. We're looking for a key level within that. So let's go to the 4-hour first. Do we have anything? No. And I don't care about this CST here. That's irrelevant. I'm looking at the previous day's range. So the low of the day to the high of the day. Anything in here? There's nothing, right? What about the 1 hour? Not really, to be honest. And sometimes it happens where there's no relevant levels. Like maybe this, honestly, like maybe these swing lows. The space between these lows and these lows, pretty significant. They're around the daily open. So what I want to see ideally is a London manipulate off these lows, or this where we open low, consolidate, and then manipulate. So an A and B reversal. Because there's only two ways price reverses. It's either this, where it just trades into it, wicks it, or like expands into it and expands away, or we trade into a level, consolidate, manipulate it, and then go, right? So either or. So here we see we trade into it, and what do? We consolidate. So what becomes your reversal point and your invalidation point for London? It has to be this low. It has to be, because if you're trading London and you don't manipulate this low, then where are we going to go? We're going to start going down here, etc., wherever. It's not going to create that small wick. Here's the daily open. It's right here, right? I don't want to see price fail to manipulate this, right? Because it can go all the way down here, etc. That wouldn't support a bullish day. So a lot of times when you come to the charts for even New York as well, you're going to have an invalidation point if there is no reversal of the day, and it's often session highs and lows. But it just depends. But in this case, that's what we see. So what do we want to see? London, I want to go and trade into this low. So here is the 2 o'clock open, the 4 o'clock, the 4-hour candle, I mean. And what do? We create an SMT here. And what is the high of the day at this point? It's just Asia session high. It's just 1800, so it's unestablished, right? So this is what I mean, super high probability to trade to this level to get to here, and then obviously hold runners to here and your overall target. And if I show you this SMT here, there's the SMT there, right? And yeah, that's really all it is, right? And it's daily continuation, so it's a specific protocol, right? And you need the daily to open low first. Like, you need these things to happen, because without these things, These are what is actually giving you more information. It's like Asia consolidation, but also the daily opening low, and maybe what the previous day did. That's the added confluence that you need to trade London. Because if you don't have that, now you're just blindly trading. It's going to be extremely hard. Even for me, it would be really hard to do. Um, so that's what we have here, and this can literally be your trade. Like, I'm not even joking. Like, this is what I literally do sometimes. I trade stuff like this. Like I said, an hourly model reversal to this, and then you can hold runners to, wherever. So I traded this day on New York. I took 2 trades, a half win on NQ and a full win on YM. There's some strength switching if you want to study this day. It is 17th of March. Very good day to study. I mean, everything that we talk about, bro, it's like, what's the low of day? It's London, right? So if you have a London low of day, and we retrace prior to the driver into a key level, you see this? But we haven't yet expanded away, we haven't yet reversed, then what should the driver do? It should reverse, right? Boom. We have this here, this 8:30 news. It does that exactly. So when I tell you the things that we teach here, dude, they actually happen. If I show you this week on indices, we can pair a driver with our logic, and it has the same reaction every single day. It's actually insane. If you look here, there's a strength switch here where we take out this high, but on YM we do not. Do you see the difference in retracement size? Look at this retracement size. Look at NQ. Why is that happening? Well, for this asset, YM to catch up. So I actually got involved within this candle to go long, right? But then it came back. So I took a partial win. Obviously, I'm going to partial here if I'm above 2R. And then leave runners to all the way over here. So when this took me out, I'm like, okay, it shouldn't be doing that. It shouldn't be retracing, but why is it doing that? For YM to catch up. So this is when I took 930 on YM. And this is where you can anticipate this expansion, because what did we do prior to this driver? Well, we created an SMT. You have a strength switch already prior to that, right? Where in Q, what do we do? We retrace into some 30-minute opposing candles, but we haven't yet expanded. So what is 930 going to do? It's going to expand, right? But that's not the only reason. It's not just because we hit this level. It's because of the strength switch. There's an SMT here as well, right? So there's multiple reasons there. But yeah, the same things we talk about, bro, are always going to be there. So that's that day. Anyways, let's go over this day on GBP. Again, there's a reversal over here, up here. So this is weekly range logic. If I draw out the weekly open, sorry, where's the weekly open? It's down here. So look at this consolidation, essentially. Like, the low of the week is trading away from just feather swings. So what you're seeing here is price throughout the week just consolidates here, and then it leaves this consolidation, trades into, whatever the fuck. But we have this reversal signature, expansion, melt expansion, right? So whenever you have, like I said, price leaves a consolidation, that's generally, I'm going to always assume that price is going to go manipulate to trade back into this level. So here you have a Thursday reversal, and then Friday continuation lower, right? So how can you already assume this? Well, what did this day do here? It opened high first, right? Put in some sort of S&P, and we started to expand away from that. You see this expansion away from that? So if I go to the 4-hour chart, you see that? It's like a V shape. And what do we do after that? We consolidate, as you see. Okay. So what's the ideal scenario for leaving consolidation? Is you manipulate this high, and then obviously you want SMT there ideally. So let's check. There, what high is this? 1 o'clock. 1 o'clock. Okay, there is no SMT there, I don't think. So that's fine. But as you see, we do manipulate it. You get that candle to closure. But look at the current low of day. This is what's important. Like, the current low of day is literally, it's Asia session right here. It's a feather swing. So do you really think that's gonna be the low of day? Probably not, right? So you can trade this into whatever. But this next day is extremely anticipatable right here, because we trade into a relevant low, and what kind of phase of price do we get? We consolidate, right? So if we consolidate after expansion, just like over here, what's the ideal scenario for leaving that consolidation? It's actually a manipulation. Now, this is going to be a little bit of advanced SMT stuff, but let's go to the 4-hour candle first, right? Have a small wick, just like over here, we had a small wick. It's just GXT, right? A candle 2 forming the high of that, but it's a little bit deeper than that. Let's go to 30-minute. There's no SMT with this high, right? As you see. But what there is body SMT, where we do not close a body above this 2 a.m. candles high. If I go to over here, we do, right? And we clearly close above this high over here as well. We're over here, like we're like wicking it, you know. So this has to do with, I'm not even gonna get to it honestly. It's a bit specific. When there is no SMT here, when one asset trades through a high and then the other asset is like lagging behind and then it trades into it, that's when you get a reaction on this asset, for example. But again, we'll go into that maybe later on. But here you have body SMT, so you can clearly see that this asset is obviously weaker. But what do we get in the distribution away from that Kraken correlation is a strength switch, right? Where we take out this candle's high. Over here we do not. You see that? So that really validates that. And this is just the fractal model, guys. But with logic, you know what I'm saying? If I go over here, here's a good example as well. Like, look at the opposing side of this Asia manipulation. What is it? It's just a bunch of failure swings. So that's a great trade to take. But right here, what's the opposing side of this manipulation? It's the previous day's low, or it's just 1700 low. Yeah, it's actually 1700 low. You really think that's going to be the low of day? No, right? So this two-stage Kraken correlation or strength switch is what's validating this to actually reverse, you know. And like I said, this is the fractal model. So if I bar replay here, you have that candle 2 closure. And what key levels do you have within this range? So boom, you have this first CSD. So you have this CSD here, and also the swing point high, right? So it's either you get a candle, you get a opposing candle off of this key level, or you go sweep this lower time frame high. It's either or, right? To form that intracandle CSD. So boom, we open up higher, we get that strength switch, we get that SMT strength switch, and we trade take out the high. So all you need to have is that intracandle change of state delivery. Boom, you can take that there. You can put your stop loss there, etc. And then you can target, you know, these lows and whatnot, right? Does that make sense? You even have some potential other opportunities here. And if you guys ever want to trade the 15-minute, trade it after a true reversal on the, like, don't just be scalping every 15-minute time frame. Like, this is when these little 15-minute swing points are going to hold, right? Like this one, for example. Like, this is really the only level to reverse from, right? It's this CSD or this fair value gap. So it's like, these are the ideal scenarios where we haven't even, so first off, we failed to manipulate this low because we trade past it. And then this retracement has something to target. Like, that's what's important. So if you go to like the 1 minute or something, I can't go to the 1 minute, but maybe 3 minute. You get that reversal signature, expansion, method expansion. That's a trade right there. Maybe this is a trade right here. You know, plenty of opportunities, even if you have, even if you can only trade London session. That's how I would trade London session. And that's how I do trade London session. I just rarely ever do because it's like 3 a.m. in the morning for me. So yeah, that's going to wrap it up for the London stream here. If you guys want me to go over indices, I traded every single week, or yeah, every single day this week. Had a very, very good week. I know a lot of people struggled, so if you can maybe see, I'm not saying like maybe you're doing something wrong, I'm not saying that, but maybe you can see what I'm looking at, and maybe that'll help. But what do we see here? 11:45 here. Do you cover yesterday? Yes. I will go over. Let's go over ES real quick. Tons of logic why we can trade ES back into this range. So let's go over it. So let's look at the weekly range. So it opens high first, right? Puts in a reversal, and you expand away from that, right? So if I go to the weekly candle, when you think about a TJF, generally you want a larger range. So as you see, this is a pretty large range on all the assets. So it's like when this asset here, the weakest asset, trades into some relevant level and creates an SMT with the previous low, isn't that just the perfect area to cap out the weekly range? Because there's nothing beyond this. Like, it's not going to expand forever. This is when you can anticipate like a TJF, for example. When you have a large range and then you trade into something relevant, that makes sense to cap out that weekly range. So the reason why we can anticipate this SMT, like when you get an SMT, that's not the confirmation, right? You need a two-stage SMT or a strength switch, or maybe the driver to expand away from that SMT to validate it. Okay, so if I go to like the 1 hour chart, you're gonna see that we have obviously expanded with the previous sessions. Okay, that's kind of added influence, to be honest, because we're not going to just expand forever. So if you expand right into a level, then we can get a retracement, right? So that's just phase of price. This is the perfect area to get a new phase of price. It's after this SMT, but that's not the reason why. It's actually what we do prior to the driver. So 930. So notice how this asset here creates the lower low. So it's weaker, right? But look at this closure. It's bullish. Over here it's bearish. So what is that a form of? It's a form of strength switch, right? So that validates this as the low of the day and the low of the week, obviously, right? So what's even more confirmation? This is, again, about drivers. So I went over all this stuff with you guys. This stuff, I'm telling you, is the most repeatable thing in the market. One of the most repeatable things. It's how we frame, like, obviously you need the correct framework, but when you know framework and you compare drivers, it's one of the more consistent things that you will see. All right, let me try to find it. It's this here exactly. It's we trade into a we prior to the driver, we trade into something relevant. So in this case, what we trade into before the driver is actually a previous week's low where we have an SMT. We already have a strength switch, so that's very telling. When you get like a two-stage cracking correlation before a driver, like that's extremely high probable. You can already anticipate what's going to happen next because that's a true reversal. So if you haven't expanded yet, then there's no reason to go back and sweep out that low again because we've already reversed. There's only one thing to do, and that's expand, right? So if I look here, this is an example of that, where prior to the driver, we traded to something relevant, right? And in this case, we created an SMT with the previous week's low. And we have a reversal candle already put in. So we have a candle 2 closure. So if you already have a reversal put in, then what should we do? The driver should just expand away. And when it does expand away, when it actually does trade away from that, what does that confirm? That confirms narrative. That confirms that this is the low of the day. So that's what we see here. The driver expands away, right? Now, I don't trade this because I'm fading the 4-hour candle here. So I'm simply just waiting for 10 a.m. So if you look here, 10 a.m. starts to expand away. What I'm waiting for is a more closer proximity swing point. Now, if you look here, here you have a candle here and a gap right here. So following a true reversal, the gaps in price, the order blocks and fair value gaps that are formed after we print a true reversal, these are the gaps that you need to be trading. I don't give a shit about any other gap. They're absolutely relevant. The gaps and stuff that form after a sweep, or not a sweep, but a true manipulation or true reversal, these are what should support price away from this true reversal. Does that make sense? So it's like when we form this gap, and then we have a candle 2, or we have a candle that's trading into that gap, which sweeps out this candle's low, as you see. So that's an SMT with a small wick. So this is when you can trade a candle 2. But this is not the only reason why I can anticipate this happening. So we have this Kraken correlation, right? Now if I go to ES, and NQ, we do not take out this low. Right, which is actually a form of strength. When you get what's the word called here? I forgot. Breakaway gap after a true reversal. That's a sign of strength, actually. So if I go to the lower time frame or something, you're going to see on NQ, this is the first SMT, right? But what do we do after immediately following that? We get a strength switch. So YM switches bullish here. So that's a 2-stage SMT, validating that this is the low of this like retracement into the gap, essentially. So I know that the low of this candle 2 is already put in, so I don't have to wait for a closure, man. You don't have to do that with the right framework, etc. So if I got a 5-minute here, this is what I personally took. So it's like my stop loss is protected by this SMT low, and all I have to see is a CSD. See that? And all I have to take is 2R out of the market. And obviously, it goes much past that, but on a reversal day, it's like you don't know how far it's going to go, you know. It obviously went like 5R, but that's not something I anticipate. It was just like my trade on Monday on RTY. Trading a reversal day, so it doesn't call for these, like, trading these huge-ass TPs. It's not going to go up here, so it's like I don't know where it's going to stop between this range. I know it's not going to go up here. I know it's going to maybe trade back to this range, but I don't know how deep, you know. So I just take 2R, you know. So that's the logic behind there. Yeah. Garett G logic for entering candle 2 was 2-stage calculation manipulation. Yeah. Yes. Problem filtering higher Bullish trades. Could you tell me which are the best profiles? Or there's no best profile. So some things to filter price is SMT. The way to filter SMT is 2-stage SMT. You can also view candle profiles. So for example, some people try to long gold, but you can't do that. So, oh my god, this fucking dog. So like this day, some people try to long this SMT, but you have to understand that it's going to be a retracement, bro. More than likely. So there's an SMT here. There's a 2-stage cracking correlation here. But how does the candle form, bro? It opens high first, right? When you think about, Joey, shut up, dude. We think about a expansion day away from this SMT. What do you want the day to do? To open low first. So it opens high first. What does that mean? You're trying to trade a day where it opens high and then opens low and then opens high again, bro. That's at least seek and destroy. So like, if you wanted to trade this, you have to understand where your targets. You have to understand your targets. So it's like you can maybe TP EQ of this daily range, you know. So like if you look here, knowing that, yes, we do have a 2-stage cracking correlation here. Here's your first stage, here's your second. But again, it's not going to reverse this day because of the candle profile, because of the opposing run size. When can it do it? The next day. So that's why I traded this asset the next day. Here's an SMT here. You have a 2-stage SMT and a gap right here. And why can we even anticipate this day being bullish? Well, you have an SMT here. This SMT here is not really so relevant because it's creating a failure swing. That's one reason. You can also anticipate this retracement here because of a 2-stage cracking correlation here, right here, and a strength switch to get to this gap. Now, when we get to this gap, we know that this asset is stronger, silver. But what do we see the next day? Is that this asset is stronger. So why is it being stronger? To try to catch up to this high, which is what the SMT is on. So when I tell you this is really how the market moves, with this strength switch, etc., SMT, blah, 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 blah. This is how it really moves. Dude, my dog started growling. That's so funny. But yeah, man, we'll go over like kind of maybe one day we'll go deeper into correlated markets and stuff like that. Unfortunately, it's not something you're gonna find anywhere. It's like you really won't, especially for free at least. It's a very small community of. I'm not even joking. Like it's actually like gate-kept almost for like a reason. But yeah, it's also like not everything is my concept, so I'm just not gonna teach you. I can't do that, bro. That's another reason, man. And just out of respect for people, I don't like to teach people stuff, but you won't find this strength switching stuff anywhere else. Yeah, you can. All right, find it. Find it. You're gonna go down a rabbit hole. It's like looking for ICT videos. There's so much information. It's just like crazy. There is a reason. So I would love to live trade, bro. Now, why don't I live trade? Well, for one, I'll just be blunt. I don't get paid for it. All right. I'm not gonna do that if I don't get paid for it, because if I live trade, everyone in here will be catching the same trades as me, right? That's obviously very valuable. And yeah, I'm just not gonna do it for free. Now, that's not the only reason. AM and T don't actually they don't support that, so that's another reason. They don't actually support that. They don't want that in their community, so I can't even do it, fortunately. But if I had my own group, hell yeah, I'd be doing that, man. I don't necessarily agree with that, but I don't have to agree with everything the AM and T think. But I would, if I had a community, I would be live trading, because I don't care if people copy me necessarily. But I think it's a really good way to learn as well. Yeah, I can do it YouTube or something. Potentially. I just don't know I don't know how to do that live stream stuff on YouTube necessarily. Is it easy? I know Nico does it. I could just ask him. Nico. Oh, he does? Yeah. Bro, like, I'm telling you, if I live trade every day, it's like, I'm telling you, it'll be crazy. Like, yeah, you would learn so much, but you also would make you would make a lot too, obviously. So it's something that you don't see people doing for free for a reason, you know. Like we can go over every single day this week, and this you're gonna see the same things. If I look at Monday, so what do we see Monday, guys? There's an SMT between this low down here. So if you look at this low, what day is that? 15th of March. On this asset, here's 15th of March. So you have an SMT here. But what do we talk about with SMTs? Like, what do you need? Like, yeah, this is your first cracking correlation, but what confirms an SMT? Because a lot of times you might have a lagging asset, they'll just break this SMT. Well, you need a strike switch, so let's go find it. So what's the low today here on the weakest asset? It's 4 a.m. Now let's go to the strongest asset, which is 5 a.m. So what does that tell you? That this asset momentarily switches strength so that the other assets can do what? Can expand or catch up, essentially, right? So it gets really nuanced. Like, this doesn't mean that this asset here will expand more than the other one, etc. Like, it gets pretty nuanced for sure. If you even look at the weakest asset, look at the high of the retracement. It's just fair swings. Remember what I said about this, guys? I'm not going to pull up my SMT things right now, but remember what I said about a cracking correlation that forms like this? Because this is a cracking correlation, but there is no manipulation here, obviously. So it's lower probability. Now, when price leaves this, what's the trigger for price to leave this cracking correlation? It's a strength switch. So if you look at this here, you see the strength switch here, where the high of right here is 9 o'clock, but over here on the strongest asset, it's 8 o'clock. So that's why you get this move here, right? But this S&P is still holding. So like price leaves this, right? This is like kind of the end of the day. It's a bit weird. When price actually leaves this, then I know it's likely going to be what? Probably a higher time from retracement, because it's not what true reversals look like, you know? So whenever you see price actually reverse from a consolidation, because it's going to do it, bro. What is that likely? What is this likely? It's likely the sell side of the curve forming, right? So like a higher time retracement, for example. So you kind of have to understand that. Now, not always. Sometimes price just leaves it, and that's just the market doing whatever. But I'm not going to trade it. You know what I'm saying? Like, I wouldn't trade this SMT here until we get a strength switch, which I didn't even trade this. I actually traded this move to get to the high on YM because I've already anticipating this to be a higher time retracement. But you even hold it again, like you're still holding it here. So that's how you know that it's likely going to be, this SMT is likely going to hold, right? But you only know it's going to hold when you get a strength switch down here. Now, if you form a true reversal prior to the driver, and the driver hasn't yet expanded, so here's 9 o'clock, right here, as we see. Have we expanded away from the low of day, or from this? Not really, right? We're still under the daily open. So remember what I told you? When can you actually anticipate a one-sided expansion around a driver? It's with this specific scenario, where you manipulate, we haven't yet expanded. There's only, like, what's the perfect time to expand? It's around the drivers, right? We've already manipulated. There's no reason to retrace if you haven't expanded. There's no reason to consolidate if you haven't expanded. There's only one thing to do, and that is expand here. Does that make sense? So that's why I'm trading these assets bullish this day, right? But it's a reversal day, so I didn't trade all the way up here, though. Because, again, when you're trading a reversal day, it's a pretty large wick if you look on some of the assets. So, like, and it's a Monday, so it's like I didn't take this whole thing. Maybe that's my mistake. I probably could have done that, should have done that. I just took around 2.4 or whatever. Now, that's all you need, really, but you could have capitalized on this day, to be honest. It was a pretty good day. If you go to the next day, right? I traded 2 trades this day. It's as simple as this. What do we do the previous day? We expand into a high, a relevant high, right? And what kind of phase of price do we get? We get consolidation, right? Where the daily opens high and then manipulates the previous high, which is the consolidation high, and then we reverse. So what is this? Expansion, consolidation, manipulation, distribution, right? It's AMD reversal. Like I said, there's only two ways price reverses. It's either like that initial V shape, right? Or usually AMD. So this is AMD reversal, not AMD continuation. This is AMD continuation right here because it's following a expansion. And now remember, if you expand and consolidate, that's what? It's a continuation signature. It's literally what we just went over right here. Where is it at? Right here. It's a continuation signature, right? So if I know that this is likely not the low of the day, then I want to trade to it, you know? So how do I trade to it? Is manipulating the consolidation high. Now what are some things we can look for? Is a SMT here, right? So that's what we get on ES. There is a two-stage cracking correlation here. And what happens prior to the driver? Here's 9 o'clock. We manipulate prior to the driver. You haven't yet expanded into the draw. So it's like, what's the driver going to do? It's going to go straight to this low. Now, why am I not caring about what price does after this? Because there's nothing beyond this low to trade into. When we think about targets, ideally, it's trading to highs and lows. Or holding positions. Like I would never trade continuation here to get to like maybe EQ this range. I can maybe hold this trade right here and then take a TP1 here and then maybe target EQ. But like entering down here when there's nothing in close proximity to trade into is that's a disaster, like literally. So you need to understand this is a relevant low, right? There's nothing beyond this low in close proximity. So it's not going to get all the way down here, bro. It's very unlikely to do that. And I traded R2Y bullish for a reason, and that has to do with like some correlated shit. Bear in mind, sorry, bro. 24. Is it what? Can you show two charts to disable? I could. I hate it though. Not gonna lie. Like when I trade, I'm just doing one chart. I just love it that way, personally. So I'm just like really used to it. Sorry. Give us some inverse fair value gap. All right, bet. All right, if I was gonna trade inverse fair value gap, here it is, bro. Let's go to my trade and look for inverse fair value gap. Okay, there's low-key none. All right, 9:30 low-key. Right before 9:30. Boom, dude. Look at that. Enigma. What do you have here? Inverse fair value gap is rejecting it. Oh my god, look at that. Retracement. You get that that confirmation there, and then it freaking rejects it. Like, oh my god, that's actually Enigma. Let's go to 1 minute. Okay, no inverses here. Damn, what the fuck? What about 3 minute? Oh, look right here, same thing. Bam. Enigma, guys. Don't say I didn't put you on. Anyways. How did you learn all the SMC stuff? My friend. Alright, anyone have any questions about London? Because that was kind of the stream here. I trade FX above 15-minute time frame GXT. Does that make the expansion model or just GXT fractal? Yeah, I would do the same thing. If I was trading FX, I would be trading 15-minute chart, probably minimum, or 5-minute. I wouldn't really go below that. But if you're trading London, I think 15 is really good. I trade FX above 15-minute time frame GXT. Does that make it? No, it doesn't really make expansion model. Now, the areas we look for reversals at are like relevant highs and lows, which is what the expansion model kind of frames its trades around. But you know, GXT, we kind of look a little bit, we're kind of trading like intraday more often and stuff like that. Whereas expansion model waits for weekly range development and stuff like that. So it's definitely different, but I still use some of those components in my trading. So it's both, I guess. I don't know. I have a problem. Okay, I already went over that. Do you consider also 1 hour SW, swing high, swing low during these Asia session as valid PY during US session? Oh yeah, for sure. Yeah, for sure. Like if London trades into something but doesn't reverse, that gives you a perfect area for price to actually reverse from in New York. Oh no, not over entries today. I actually put this in my channel, like, because some people wanted to go over London, and I already had the slides for it. That's the thing. I already had the slides for it, so I was like, do you guys want to see a London session? But blah blah blah, how to trade it, and most people said yes, so I just did it. Maybe next week I can do that. I don't have slides ready for to do it, but I don't necessarily need slides. I just think it makes it a little bit easier to learn and shit, to go over first. But I don't need slides for really anything if you guys want us like a lesson on something. Okay, I think we're like, okay, we're around here. So I'm just going over the questions that I'm tagged in, because otherwise I can't just read all the chat. So I think we're good here. RTY is correlated YM. So this is how I use RTY, by the way. A lot of people don't even trade RTY or anything like that. So this is how I typically do it. Ideally, the divergence you want to see with NQ is ES, but you can also refer to YM. But here's the thing about my trading, is a lot of people don't use YM, but the reason why I can use YM is because I'm always requiring a two-stage Kraken correlation, so it confirms the YM SMT, you know what I'm saying? So that's why I can use it with YM, where like TTRades does not use YM, you know? There's also a time and place to use YM versus like in like decoupled markets, etc., where markets are not correlated. But if I want to trade like RTY alone, I'm always going to refer to YM. If I'm in a decoupled market usually, and I just want to trade YM, for example, I'm going to refer to RTY. So I think I just hear my dog whining. He's yapping, bro. Is body SMT the same as normal SMT? It's just one form of Kraken correlation. There's many forms of Kraken correlation, like besides highs and lows. There's like a lot. But that's just one. Like if you use that alone, you're gonna get railed, you know. That's why two-stage, and I've already taught you guys some forms of two-stage. There's even more forms of two-stage that I haven't taught. But the ones that I taught, you know, you'll be fine if you just use that. Last 2 weeks have been hard for me. I know my mistakes, journaled everything, but I like to see your logic at least over the past. Okay, I kind of went over some of that, some of the trades here. There's literally logic for every single day here, but it has to do with like a deep understanding of like a correlated markets, which is a gap in understanding for you guys because I haven't really taught all of that yet. If you watch my SMT stream, I would genuinely start requiring strength switching in SMT, like two-stage SMT, because that's what I'm requiring to filter through price and stuff. It's the best filter for price, I'm telling you. Now, what comes before SMT and stuff like that is framework. Like you have to have framework before you just use any SMT, right? So that's important. Like you need logic, and then the SMT just confirms it, and like drivers just confirm framework as well. What contracts is your YM on? So like when I refer to contracts, it's a bit different. If I'm trading top step or something like that, where I'm maybe trading like when I'm having a copy traded, for example, I always have to refer to the updated contracts because I'm using TradeSyncer. Like I have to use the updated contracts, otherwise it won't work. It won't actually sync my trades. But you can just look at. It's a bit weird. Sometimes the contracts are a bit cooked, but usually they're the same thing. Now I will say for oil, it's cooked as fuck. Like I don't know why, dude. So like you really have to check both assets. And if one asset sweeps, I'm always referring to that as an actual sweep. Okay, generally. But it's always confirmed with like a two-stage SMT. So it's like either way, if one asset doesn't sweep, the other one doesn't. It's like which one do you trust? If you get a two-stage SMT, okay, then you obviously know it's an actual reversal. So if you look here on this contract, we do not sweep this low. So it's like, how do you trust it? If I go over here, You do. Like, which one do you trust? Well, I'm just going to confirm with a two-stage SMT. So if you look at the low here, this was the weakest asset. Now it's creating a higher high. So 8 o'clock is the low. We're over here. 9 o'clock is the low, right? When it actually created the higher high. So there's your two-stage crack right there. So either or, it doesn't really matter. When I see equal lows and stuff like that as well, I'm always going to check the continuous contracts versus the updated contracts or the micro, just to see if it's actually a actual reversal, because sometimes it's not. So if I see equal lows on one asset and then a sweep on the other one, I'm always going to refer it to it as an actual sweep. Could you quickly tell us the difference between driver manipulating versus expanding? Okay, so this is all dependent on what happens prior to the driver. Like, do we actually hit something prior to the driver in reverse? Then the driver should actually expand. If we don't, if you could maybe hit a key level but consolidate, or maybe don't hit any key level, then I want the driver to go do that. So I'll show you an example of that. Dude, this dog, bro, he is a yapper. You really can look at all of these. So like, remember I went over this trade here. You have an SMT prior to driver. You have a switch in strength. So what should the driver do? It should expand away. That validates narrative. What about this day? What do we have here? Here's a relevant low in the market. We expand into it and consolidate. Right. What do we do prior to this driver? We trade into this low. Okay. And what should 830 do if this is going to be true manipulation? It should expand away. Right. You see that? Now, after a true reversal, right, the fair value gaps that print should hold for price to draw into what? The draws and liquidity. These are really the only relevant targets right here, because there's nothing beyond these highs. It's not going to get up here. It could, but this is my course, bro. It's like you need to be targeting, you need to be in your position before you take out these highs. If you try to enter after these, I mean, the win rate is like so much less probable, dude. The expansion is going to occur, the cleanest expansion is going to occur on its way to the most low resistance draws, right? So if, I'll even show you my slides here on drivers real quick, because again, this stuff is actually very repeatable. Where the hell is it, bro? So here's what you saw here, right? Where we trade into a level, but we don't have a reversal candle. So I want the driver to go and create that reversal. Boom. You do that, 830 right here. So once price expands away from that reversal, let's go over an example here. Where is it at, brother? I have a lot of slides, man. These take so long to make, by the way. Okay, here's an example right here. So what if you open up the driver oh, actually it's down here, actually. Sorry. Where's expansion at? Where's expansion at? It's right here. Okay. What the fuck? Prior expansion. Where? Here. Boom. Fuck. So what if you expand away from the low of day prior to the driver? Then I want the driver to go and, hit a key level to continue from. So if you look prior to the driver, what do we have here? We have a key level. We haven't yet put in a reversal from this key level. So I want the driver to go do this, to trade into it and reverse. Okay. You can trade a candle too, like this. There's a couple reasons why you can trade this candle too. One, small wick. The driver is expanding away from the low of day. There's also a strength switch in here that validates this reversal. So YM was actually the weakest asset because it takes out this low way over here. And also it just trades past this low where this asset wicks it, right? But what you're seeing in the distribution away from that is a strength switch. You can just see it here. We have a smaller wick right here. Like, I don't even have to go to lower time frame, larger wick. It fills in the whole gap here. Over here it does not even get close. So those are some ways that you can tell with switch strength, and that's how you tell that all the markets will expand to this high. Okay, that's why I traded NQ to get to this high, and that was really it. And I also traded RTY as a lagging asset to get to this high too. There's a reason for that. So a lot of people will view this as an SMT to go lower. That's absolutely wrong, for a couple of reasons. But I might do a video recap on YouTube to cover all of these days that I traded. There's plenty of logic to take trades here. Last week stream you talked about why you choose the Y trade. I am not wrong. There was no fractal model at the time of the entry. S&T and everything aligned to SS. But there is no fractal model. Is it okay to enter then? So like, the reason why you see me like bending rules is because I have experience. Like, I'm not going to wait for a candle closure. The market, I'm not going to lie to you, the market does not care about your candle closure, bro. If you have everything aligned, it doesn't care about your candle closure. But it's obviously best if you don't have the experience, just wait, you know. Now, if as long as the candle supports expansion, like that's the rule that you should be requiring. And it has to be in the right areas. Like that's the reason why I don't teach it. It's because like it's like specific, you know. It's like if people just start trading candle 2 closures everywhere, they're just gonna get destroyed because they don't have the experience. They don't know when and where to use it. So it's something that I would have to dedicate a whole stream to obviously show how to do it and where to do it, etc. But when you get experience, like you can bend these mechanical rolls, or you know, because mechanical rolls can't hold you back. Like if you go to a fully mechanical system, they will never, ever, ever be able to replicate a discretionary trader with experience. They will never be able to do it because those mechanical rules can hold you back. So I'm not saying the fractal model, not saying that at all, because fractal model is one of the best mechanical strategies there is, like truly. But I'm saying like sometimes you can bend rules with the right intentions. It just has to make sense, bro. Can you go over with us how to filter? So like I said, there's a couple ways to filter. It's like candle profiles, so like weekly, daily candle profiles. Like how is the weekly, the daily kind of forming? That's going to tell you ideally where it's going to close and how far it's going to expand. So the wick size tells you how it's going to expand. How it actually forms is going to tell you how it's going to close, you know, or what kind of candle is going to print. Phases of price, when we hit objectives, that's another thing. That's another filter for price. 2-stage SMTs, drivers. There's a multitude of things. And just intraday framework as well. It's a lot of things. It's like, I can't just give you a straight up answer, but it's also very dependent on what happens. I don't know. It's just like, it's really a nuanced thing. That's why you see like all these videos on daily bias. It's because it's hard, dude. It takes a really long time to learn. It's a nuanced thing. It's like you can't just have this 1, 2, 3 easy daily bias strategy. Now, if you do, even those type of traders, they still even have they know what their setups look like. You know what I'm saying? But if you look at my trading versus maybe AMs or Ts, especially AM for example, like he's taking way less trades. That's because he's requiring more on the high time frame, where I take way more trades, but I'm requiring way more on the lower time frames. So there's like a give and take. Everyone's filtering looks different. Everyone's A+ strategies look different. You know, so it's hard to answer those questions. Am I happy Indiana won? Sure. I don't really care too much about who's gonna win the championship at this point. Fuck, who do I want to win actually? I don't know, man. Not gonna lie, all pretty young teams. I would be happy with really any of them. Maybe not New York. So maybe I would be happy the Pacers won. Fuck it. They haven't been good in a while. Oh yeah, I remember that, dude. That was so funny. That was actually fun. Me and T were gambling on Apex. That was hilarious, bro. Alright, anyways. These are questions that are like really far away. You're friends with Romeo? Hell no. Apart from London Open, are there any other drivers within that are relevant? Only for Forex, I believe. So, for example, like Euro News will come out around those times, I think. Again, I don't actually trade, what you call it? What do you call it? London, or sorry, Forex. Profoundly intriguing how you managed and established it. Dude, what the hell? Dude, what? Dude. This guy be trolling, bro. Oh yeah, I'm gonna open an hour for sure. We're probably gonna end it here, guys. Not gonna lie. You know ball? A little bit. Not really. I'm not gonna lie. I know football. I know football for sure. I love football. Uh, who's your team for football? Y'all are gonna hate me. It's the Cowboys. But I live in Texas, guys. I live in Texas, so it's like you can't even hate, bro. You can't hate, dude. Yeah, we got Pickens though. It's gonna be interesting. Oh, wait, Redskins fan? Dude, the Commanders are good as fuck. T.D. Daniels is the truth. Dude, the NFC East is actually stacked, man.